Hello traders, welcome to another episode of Big Just Trades. In this episode, we'll be diving into fair value gaps and focus on lesser known truths about them. We'll be exploring advanced concepts on the regular and inverse fair value gaps, which can give you an edge over your trading setup to help you execute winning trade. But that's not all. We'll be talking about different entry models, then dive into the inverse fair value gaps and how to use them as an entry model. We always appreciate your support, so please give this video a thumbs up and subscribe to our channel if you're new. See you after intro. Welcome back, guys. This episode on fair value gaps, IFVGs. So fair value gaps provide insight into market future movements and can be used to develop effective trading strategies and entry points. So we will be talking about regular fair value gaps, the psychology behind the fair value gaps. Then we will dive into the inverse fair value gaps and see how the inverse fair value gaps works and how you can use that to our advantage. So let's get started. Fair value gaps forms when we have insufficient delivery of price. When the market is in a hurry to reach a particular price point, smart money enters the market and executes a large number of orders, which causes displacement in the market. So fair value gaps is mostly identified on the chart with three consecutive candles, with the main focus on the middle one, without the neighboring candle to the middle one touching each other. So we draw a horizontal line across the body of the middle one straight through the wicks of the neighboring candles. So that's how we identify fair value gaps on the chart. When a bullish fair value gap is identified, it shows a lack of sellers in the market at a particular time where the fair value gap was created. So what price does at this point is rebalance itself, selling to these areas, then picking up all the buy orders pending within the fair value gap area. Similarly to the bullish fair value gap, we have the bearish fair value gap. It has the same scenario as the bullish scenario, but this time price shows a lack of buyers as much of sellers in the market. So these areas of the fair value gap is filled with pending sell orders, which causes price to rebalance itself, buying to this area and picking up all the sell orders in order to gain more momentum to push price lower. Next, we'll be talking about the psychology behind fair value gaps. Let's get into it. Like I said in the previous slide, fair value gap is created by three candle sequence. That is, the middle candle is identified as the inefficiency candle, with the candle before and the candle after it is marked with a horizontal line and indicated in between as the gap. That is where the fair value gap is. So at this point, we are using the bullish fair value gap as an example. So when you switch to lower time frame, you see different price action movements. That is the fair value gap. In between the fair value gap, you see different price action. That is, you see an uptrend in between the gap. That is causing a higher highs and a higher lows. So what this price action movement does is it will trigger price to come down to fill the imbalances, picking all the pending buy orders, and then it will push price higher. Moving on, we'll be talking about the regular fair value gaps and models within it. So we have two models. That is the BC model and the CB model. With the BC model standing for buy side imbalance, sell side inefficiency, and the CB model standing for sell side imbalance, buy side inefficiency. So with this said, let's move forward. With the BC model, once I said it stands for the buy side imbalance, sell side inefficiency. So what causes the BC fair value gap or the BC model is price offers only buy side delivering in one direction. So what it does that if price is going higher, it causes the imbalances in the market. That is what we refer as the buy side imbalance and the sell side inefficiency. So what price does is the algorithm will seek to rebalance the inefficiency by offering sell side delivery, which will close the fair value gap, then it will push price higher. So similar to the BC is the CB model, which is the sell side imbalance, buy side inefficiency. So what causes the CB models? Price moves sharply downwards without enough buy orders to balance the movement, creating an imbalance. That is the CB fair value gap. So what price does right now is the algorithm will then seek to correct itself by offering the buy side delivery to fill these gaps, picking order, pending sell orders, then push price lower. In between the gap of the fair value gap, we have three sections. That is the premium at the top, then the consequent encroachment 50% level, that is the middle, and the discount level below. So each of these level offer a strong support level, a support or resistance level. That is depending on the model. That is, if it's the BC model, it will be acting as a support level, and if it's the CB model, it will be acting as a resistance level. So let's dive deep into the consequent encroachment level. So that's the zero point 0.5 for the 50% level. So this level serves as a strong support level because depending on price movement, whether the price movement is high or low, price will always come to this level 50% of the candle, fill it, and then reverses. So once this level is breached and the candle keep on forming in the opposite direction, that is considering this a CB model, the fair value gap created was the bearish direction. So this level was breached and we saw three candlestick patterns, that is causing the consequent encroachment level to be breached. So what this level shows is that price might be reversing to the opposite direction. Then next on the topic is the inverse or the inversion fair value gap. Let's dive in. So the big question, what is an inverse or inversion fair value gap? That is the shortcut being the IFVG. That is the I standing for the invest. So what invest fair value gap refers to is the fair value gap that has been disrespected. That is this which causes the fair value gap to switch its character and often becomes area of support and resistance depending on the direction of the market. So considering the chart on the left side, that is the fair value gap for the bearish side being the bullish side being disrespected, which will cause a bearish side fair value gap or invert fair value gap. On the right side is the bearish fair value gap being disrespected, causing the market to switch side, causing the inverse fair value gap on the opposite direction. So key points. So every time the price breaks through a key demand or supply zone without respecting it, that area switches its character. A demand zone becomes a supply zone and vice versa. That is the supply zone becoming a demand level. So let's take some chart examples while I explain the entry models. We'll be taking two examples while I explain the entry models. So let me state the models. One, you place your limit order at the extreme lowest point of the IFVG. Then the two, you will place your entry model at 50%, that is consequent encroachment of the IFVG once identified. So with this sell trade we will be about to take, we'll be looking for the CB entry model. That is, we will be placing our entry at the 50% consecutive encouragement level, or we'll place at the discount or the extreme lowest point of the IFVG. So let's get on with it. So we identify our level from a higher time frame. Sorry, I cut that part off. So once the high time frame level is identified and price react to this level, we will watch for a market structure shift. Then we identify a market structure shift here. Once we identify market structure shift, we will then look for our fair value gap. So at this point, we are looking for INFVG. So when you look at the left side of the marked level, you see that there is this fair value gap, the BC model, which price disrespected, broke down, created the market structure shift. Then it gave another fair value gap, that is the IFVG. Here we'll be taking our trade. So what you do is you mark from the original buy FVG across the new sell FVG that we have identified. So at this one, we'll be taking our trade at the consequent encroachment level. That's 50% of the marked level. I mostly like the 50% because depending on price movement, price can easily tap the 50%, then it will drop or it will buy off. So always use the 50%. But once the market is slow, kind of slow, you can use the discount price. So this one, the discount price is the top. So you can use the discount price depending on price movement. If the market is low volatility in the market, you can use the discount price. Or but once the market is in a high momentum, it's either use the premium price or the critical encouragement level. That's the 50%. So let's get on with it. So this trade, we mark our level, wait for price to drink back into this level, then bam, we set our take profit. Here we are. We took the chart example on the sell side, so we'll be taking one for the buy side as well. So without wasting much time, we will be brushing off with this one because we did most of the explanation on the sell side. So this one, you identify your level, the higher level, higher extreme level, that is the higher time frame. So once price reach this level, you wait for price to react to this level, then you switch down to the lower time frame for entry. So this is the lower time frame. Let me say 15 minutes here. So once identify, you wait for your market structure shift, identify your fair value gap, then wait for price to react to this level, then you enter. So with this one, if you identify our market structure shift here, then this is the IFVG we're buying from because there was previously a fair value gap for the sell side, which market was suspected closed above this point to create our market structure shift. Then here we wait for price down there at the 50% of the IFVG, that's the consequent encroachment level. Then here is the trade afterwards. And that brings us to the end of this episode. So if this video was helpful, don't forget to subscribe to our channel, show support, and turn on the notification bell that you don't miss out on new content. See you in the next episode.